How do you love your home if your home isn't what you want it to be, but you want it to be something else? You need cash, right?
Yeah, I've been there personally.
Yeah,
Have you been there? Like,
yes.
you've owned a lot of homes too, right?
I've been there. I'm there right now, and I recently did a deal with you, quite honestly.
Yes, you did.
Let's have full disclosure. I'm a client.
You are a client.
And I have a nice little home in Spryfield, and I needs about another, I'm not going to say the number figure, but I need another little dollar figure to get it to where it really needs to be.
Right.
And we managed to put a good deal together with your help to do that.
Yeah, and I think it was the right time for you.
Yeah, it was absolutely the right time because and a lot of people are in that position because equity is there for people, right, in this area. And I'm sure in Ottawa, there are a lot of people in the same boat.
Yeah, I think the Ottawa market and the Halifax market typically very similar.
Yeah.
Very similar. Yeah. And, home prices across the country have increased, but I think Halifax and Ottawa, very similar markets. We have a lot of federal government employees here in Halifax.
And provincial.
And provincial, of course. Yeah. And, in the nation's capital, it's the same type of situation. Yeah.
Military, a lot of military people in Ottawa as well.
I think so, too.
Yeah.
And, I'm going to use it pre-pandemic. I don't even know, is that really, I guess that's a thing. Pre-pandemic. In Halifax, we probably had maybe more of a nightlife than Ottawa had. I've been to Ottawa. Ottawa's fun, but I think, Halifax might be slightly more lively for a small town.
We're East Coasters. We know how to actually really party on the East Coast.
And like the kitchen parties and all and all these things.
That's
and
right.
I think we may have the most bars per capita, but I'm getting a little bit off topic. Let's talk a little bit about home prices.
Okay, and, but the point is you need the equity in the home or the deal is not happening, right?
100%.
Yeah.
And, in your scenario specifically, we knew each other obviously from the radio, and you were buying a new home, and we did that deal, and that was all cool.
Yeah.
You got into it. Everything was good, copacetic. You did a variable rate.
Yes.
Great choice.
Yeah. What was your advice?
And obviously that was pretty good advice back then.
Yeah.
Just like what I said, friends don't like friends, take a fixed rate. And now you're in a position, obviously the equity is much more than when you bought it. There's a good price growth.
Exponential growth.
And you pay down the mortgage,
Yeah.
which is also positive.
Yeah.
So you had that equity that you were able to leverage and now use those funds to improve your home.
That's right.
I think you like your house now.
I love my spot. But you know what? I'm going to love it even more when it's all finished and now I have the money to do that because of the deal.
Yeah, and I think you've said to me a few times, it's like you had some, issues that pop up. That's very common.
I had to deal with that, but I had the ability to deal with it.
Right?
Yeah.
And you had the cash and credit to be able to figure that out.
That's right.
And you've also done a lot of work to the inside.
I did a lot of work to the inside.
But now the situation is, how are you going to take it from this house that you love it already, but how do you really love it?
Right. So what made me a good client then and not that this is about me, but for an educational perspective, you deal with a lot of clients. I'm probably, if you could map out somebody that you'd want to work with, and their scenario would be me.
Yeah. I mean, obviously you're easy because I give you a list of things and you get it to me right away.
And that's key. That's a huge component to this, right?
Yeah. You know where your documents are. That's good.
Yeah.
Your credit's good.
Yeah.
That's great. You were in a variable rate, so the penalty to exit your existing term was only 3 months interest. So that is nice, Todd.
Yeah.
Some people that we see when we do a refinance, we try to do a refinance, if you're at a fixed rate, obviously when you're at renewal.
Yeah.
But in your case, you would have had to wait a couple years to be at that renewal place. Because you were in a variable and the rate that you had from before, we're actually able to give you a better interest rate, and it's only 3 months interest to get out. The nice thing is, in your scenario, you bought when the price was still relatively low, and you were able to benefit from the increase in the property values, and now have this equity that you're able to access. So that's, I think it's kind of the best scenario.
Yeah.
And in your situation, it's really the path of least resistance.
Yeah.
Good for you.
Yeah.
And it's a pretty easy transaction for us.
Yeah.
And we're really able to make you happy.
Right.
Because now you have this equity, you have a lower interest rate, you have the equity in your hand to do the work. And now, once you do your work, Todd, your home is going to be worth even more than what it was right now today.
Exactly. Yeah. Exactly.
It's a no-brainer.
It's a no-brainer. So I think it's important, though, when people want to do these things, because you're putting the cash in my account. I could go to Las Vegas and gamble that money, right?
You know what? You still might. I don't know. I don't think so.
No, I get it. It's but the point is,
but I'll also be on you to be like, how are those renovations going?
But I think
it's the accountability sometimes.
But the point I think is that people need to be personally responsible and accountable once they get that money to put it into the house.
100%. Yeah. And I think some people, I think some people that refinance, and I don't want to discourage this because I think it's a great way to do it. Some people will refinance to consolidate their unsecured debt. Nothing wrong with it.
Yeah, it's good idea.
It's a good idea if you have the equity, but I think it's something that you shouldn't just get in that same situation again. You know what I mean?
You don't want to use it as a bank or
as an ATM.
ATM, right?
Yeah. And there certainly are some clients that refi over and over and over again. Sometimes it's to improve your property, but I think in some cases they're using that home like it is an ATM. And what happens if that price growth of the home slows?
Yeah.
And you're not able to do that refinance, every like 2, 3, 4 years.
Yeah.
In your case, we could do a refi today. You do your renovations, and maybe in another year time, do another refi. You probably have more equity in a year's time when your renovation's done than you do today.
Exactly.
And, we see this. And I think every transaction is a snapshot in time. And,
What do you mean by that?
It's based on what the property value is.
Right.
What are your assets? What's your income?
Your employment income.
And what's your income? What's your credit?
Yeah.
Every transaction is a snapshot in time. There are transactions that'll work today that might not work tomorrow. And there's transactions that'll work tomorrow that might not work today based on a variety of different things. And I'm using today and tomorrow very loosely, but maybe, a few months down the road.
No, but sometimes today and tomorrow are drastically different.
Yeah, exactly. And people's situation does change pretty quick.
Can change. So maybe people who are sitting on the fence thinking, should I do this? Explore it, and maybe you could say, well, I'll do it in the summer, but you might not be able to do it in the summer because employment can change, your health can change, and the market can change.
Yeah, 100%. And these transactions do not happen overnight. A mortgage is a complex financial vehicle. Yeah. And typically what we tell people when they're doing a refinance, the average file that we do is about 60 days from the day we open it to the day it's funding. In your case, it was quicker. Yeah. And the part of the reason that your case it was quicker, you got the docs right away to us. You knew what your documents were. I was already very familiar with you and your file, and I was able to take an existing file, copy it over, update it, and get a few documents, and I had it approved just like this. Right. It's not always that easy because sometimes we have to kind of chase people. Yeah. Who's more motivated for this? It seems
strange to me that you got to chase people when it's to their benefit.
Well, I think sometimes people are just not really good at paperwork. Yeah. And I think that's probably why we have a job. Yeah. I kind of think to myself, I was like, okay, if this was just you could click a button and do it, why would I even be employed? The reason that mortgage brokers even exist, and mortgage brokers really haven't been around for that long, Todd. I've been doing this for 16 years, but mortgage brokers have been around since the 80s, maybe late 70s, early 80s. But back in those days, mortgage brokers would be leveraged maybe to get a mortgage with a lender when maybe they couldn't get approved with a bank. Maybe more like alternative lending, higher risk lending was done with the mortgage brokers. Yeah. And now we do most of our business is prime mortgages that would have previously been done at a bank branch. But because these transactions are so complex, we certainly do transactions, with bank lenders every day. And we're really experts at doing this because this is the only thing that we do every day.
All right. So we want to talk about loving your home, and first-time home buyers. I mean, they really fall in love with homes. I'm sure you see this, right?
They do, and sometimes for their detriment. So we'll certainly talk about that when we come back.
Okay, let's do that. Mortgage 101, your guide to homeownership with Clint Wilkins and myself, Todd Veinotte. We'll be back.